The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Good morning from TFNN. Welcome to the May 11th, terrific Thursday edition of Trade What You See. I'm your guest host, Stevie Perseverance Rhodes. And I hope that everyone is having a great day out there. I'm filling in for Larry Pesavento. So let's go ahead and get this show started. I'm absolutely grateful for your presence here. What I want you to know, though, is I'm absolutely here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Maybe you can't give us a call. You can always send me an email, steve@tfnn.com. Just in the subject line, I don't know, put trade what you see or something like that, or mastering probability, my newsletter service out there, just so that I can pick that out of all the emails that go to junk out there. Of course, inside the Tiger's Den, you can send me a ping at any time. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have Dow futures. They are trading off about 30 points, trading out about 20,864. S&P down nearly 5 points, and the NASDAQ off 13. You've got gold up $3. Trading out $12.22. Silver's up 4 pennies off of its high earlier today. That's trading out at $16.25. We'll certainly take a look at the metals, which means we're going to take a look at the Japanese yen currency. We'll take a look at some things that are trading in the pre-market. How about snap, plop is what's going on here. That is trading right now at 1750. Whoops. Almost blew that one there. Trading at 1758, so that's going to be, an all-time low, or should be when it opens. It's going to be trading below the lows of March 17th out there. Lord knows if that's an A to B equals CD to the downside, but it is what it is. You got Straight Path Communications. That's trading at about 178. So it looks like there's a bid to buy out Straight Path. That closed last night at $223. Macy's closed at $23.94 in the pre-market. It's trading out at $26. Symantec, SYMC, closed out at $33. It's trading at about $31. To the upside, you've got NetEase Corp. They closed at $279. They're trading out at $284. Dry Ships, DRYS, used to be a popular vehicle here at, well, that doesn't make any sense. Maybe there was a reverse split or something. It says it closed at 96 cents, trading at $6. Maybe somebody then can investigate that. Let me know, was there a reverse split or something inside of Dry Ships, or is that really a move out there? Because that would be one heck of a move. I just hard to believe it. But Sangamo Therapeutics, SGMO, that's trading out at $6.20. That closed at $4.35. But let's go take a look at what the equity futures markets are doing out here as we speak right now. We'll take a look at the daily charts. Years ago when I used to do this show, before I really honed in and traded the futures market, it was really a result of doing the 9 to 11 o'clock slot that made me truly focus in on the equity futures contracts. Because, it used to be, like many of you out there, just really focused on the ETFs, 1 to 4 split. Thank you, Duffy, with regard to Dry Ships out there. And it was still a nice move, though. If it's only 1 to 4. But in any event, and just used to rely upon, hey, what was the closing, volume and testing of swing points inside the ETFs? And then I found out that, geez, that was only price discovery for 6 hours of the day. Yeah, you could use some pre-market, post-market stuff, but the reality was it wasn't telling the picture. It was really about trying to identify different patterns inside of the equity futures markets, where we had nearly 24 hours worth of data, price discovery, and that's where all the pattern recognition really came together out there. So look, you don't have to trade the equity futures contracts. You don't have to, but maybe if you're trading GLD, you certainly want to know what's going on inside of the gold futures contract, or silver, or certainly the currency pair, the yen these days, because of its correlation. You don't have to trade those, but with if you are trading the ETF structures, for example, without that data, you are absolutely trading blind. And I just want to make sure that it is so valuable that to trade without it. If you are like an intraday, a day swing type trader out there, you just really need to have that information. Now, as we take a look at the equity futures contracts on a daily basis, if we take a look at this screen here, hopefully you're watching this on Tiger TV. If not, I'll describe to you what we're looking at. The upper left-hand corner is the ES Mini for the S&P 500. The NQ, upper right-hand corner. Lower left is going to be the Dow. Lower right is going to be the Russell 2000. So if we take a look at the ES Mini, we'll go ahead and explode this chart up on our screen here. We can see that price has basically been traveling in a very narrow range. Now, when I say narrow range, what you and I are really focused on is the body of the candle, because the extreme emotions of the trading session are what we'll call the wicks, what we'll call the upper and lower shadow of a candle. It's like a temper tantrum, that maybe a baby might throw. It is truly the body of the candle that is the essence of price. So here's what we know that is important. First, with regard to the ceiling, the top, the resistance area inside of the ES Mini, it is clearly 23.97 and a quarter. You write that down on a pad of paper, because any close above that with significance out here says that the ES Mini is now ready to fly up to its next level. I don't know what that next level is just yet, but since we have been consolidating between 23.20 and 23.97, what I can share with you is it looks like about a 70-point move to the upside when this consolidation gets broken. Will it get broken? The answer is yes. Unequivocally, absolutely, positively, yes. So those of you that are grizzly bears out there, look to buy the next dip when and if it happens out here. Now, in the ES Mini, that dip, should it occur, is going to find some substantial support at about the 23.74 range out here. By the way, right now, the area that is trading within is really between 23.92 and at 23.97, a 5-point move out here. It's pretty narrow. I'm open to a pullback into 23.74. Boy, that would be beautiful. What I want you to do is those of you, I'm speaking to those of you that are bears out there, because all of you that are bulls, you already have this figured out. What I want you to do is I want you to be focused on buying the next dip. Buying the next dip out there. You want to make sure that you have that ingrained in your soul for a while to come out here. You really want to do that. Now, if we go take a look at the NQ right now, this little puppy here, it has given us the potential of a pullback signal. We really won't get that as we take a look at this chart out here at about the 56.42 level. Now, if price gets below the 56.42 level, then you're going to see price pull back to 56.07. That could be the buy the next dip on the NQ. This has had a substantial run ever since we came back from the Easter break on April 17th. Right at the open, Mastering Probability subscribers, right down here when you take, in essence, at the NQ around the 53.55 level, bought. It's been a heck of a nice run. We want to stay in this run as long as we humanly possibly can, because it is going to the moon. We had a full moon last night. Oh! Steve Rhodes, TFNN. So great.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Excuse me. Hopefully you didn't catch that cough out there. So I had a question that came in inside the Tiger's Den. So let me go back to that question here and try to answer it, at least try to answer it by giving you something to think about. Now, came in from P inside our Tiger's Den. He said, please, are you still showing potential market top May 17th through the 19th? And that was a call that I made months ago. Many months ago, because really that just was following along the typical pattern associated with our annual pattern, the annual seasonal pattern, as well as the presidential election pattern out here. So the question is, so it's not as if I just pulled that out of my arse or any place else out there. It's just simply understanding the dynamics of the markets over the last 85 years and what it does on average. It's very helpful as a tool and an indicator out there. So the question is, do I still expect the potential market top May 17th and 19th? What do you think? So that's really the question out there. That's the most important thing. And nothing has really changed there. The question is, excuse me, and here, sorry about that. Here's really, this is one of the charts that's important to take a look at, right? And I've shared this with each of you so many times throughout the years out here. It is absolutely worth noting. So if you take a look at, this is by the way, this data is coming from the Dow, right? So it's not coming from the NASDAQ. So if we're going to try to identify signals for what the market is currently doing versus, what it has done in the past, the basic initial high, the sell in May, so to speak, sell in May. This is where the stuff that you hear on most of the stations that you and I call BS on it. It's all before Steve, because they would have you believe that if you sold on May 1st, that's the thing to do basically through November. Nothing could be further from the gosh darn truth out there. And then you got all those folks talking about the Santa Claus rally, okay, as if it begins, the week before Christmas or after Thanksgiving out there. After Thanksgiving, okay, I could deal with that. Most of them are dealing right around the Christmas time frame. You've missed the majority of the move over the last 85 years on average. So do not buy into any of that load of malarkey out there. And I'm just being very kind. So look, let's just get back to the May 17th, 19th time frame out here. And on average, you can see that the actual short-term top, and it is a short-term top that occurs inside of the Dow, is this year, which would equate to May 19th. So you've got the May 3rd time frame. You've got the May 19th time frame. If we just simply go out here, we take a look at the Dow. We take a look at what it's done so far. So we know we had a top out here on March 1st. We know that there was another top that occurred in essence on April 26th out here, kind of a double topping-ish type pattern, if you will. So not really too far off from our seasonal pattern out here. And then what the Dow would typically do around May 19th is move down. Now you can see meandering between May 3rd and May 19th is in essence what the Dow does, or when it forms its first top, and its second and third top out here. This is what the Dow typically does. So yeah, the May 19th is still out there. But I haven't given you the something to think about, have you? And it would be a gift, folks. It would be an absolute gift if, in fact, we see a market top around May 19th. And what I say when I want you to think about reloading and I want you to buy the dip, it would be just an absolute probably buy of a lifetime, another lifetime, right around June 25th. Somewhere right around there. I don't expect or anticipate that the market's going to make this usual pattern where it dips down to June 25th, heads up into July, then heads down into October. So I'm not calling for that. I'm calling for a shift in this cycle out there. Now, go back to the time when QE was announced. And I want you to think about this because I don't know which side of the trade that you were on. If think about QE, when QE1 and QE2 and QE3 and QE4 and how many ever QEs there were that were out there, were those buy the dip events? If you knew then what you know now. Now, if your answer is yes, then what you will do is you will heed my warning fourfold or fivefold or sixfold out there. Because what I can share with you and what you know to be true, okay, you may not like this current administration. It doesn't matter to me whether you do or you don't or whether I do or I don't. What I'm focused on and what this show is about and every show in my newsletter is about being able to help you time the market and by being able to keep you in the market and maybe utilize some of that information that is out there. So are you a person that believes that there's going to be some type of tax reform? Do you really believe that guys like, they just use the guy out there, okay, we'll call the guy, Warren Buffett. How do you think he has positioned his portfolio, okay, with his guys that he's got that are buying equities out there for the next several years? You think he's got a bearish outlook out there? Do you really? You really think that there's not going to be some type of tax legislation that goes through? That there's not going to be some type of tax holiday where some of that $2.6 trillion comes back to the United States? Now, the Federal Reserve only increased their balance sheet by $3 trillion or $3.5 trillion out there. You start, and that was over a period of time. This is called boom, 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 right away when this money can come back, let alone a reduction in corporate taxes. That's another whammo and bango, let alone the tax reduction to the high-end income earners out there with regard to what's going on inside the Health Care Act out there. So you want to talk about QE. You have not seen QE like this. And we haven't even talked about what's gone on around the world. Now, you may not believe me. You may say you don't know what you're talking about. And then what I would urge you to do is just go do the work yourself. Please, because whatever you hear, whether it's from me or somebody else, go ahead and take a look at the work that I've already done. Because I would not share with you something that just I pulled out of thin air out here. But I can tell you the last time, what we know is that from 2004 to 2006, June of 2004 to June of 2006, when the Federal Reserve was raising interest rates a quarter a point at each meeting out there, in a row. Now, we're not even doing that. But during that time period, the S&P 500 had no problem moving higher. Now, why is that? Maybe many reasons out here. But certainly one of those, when they had I forget what they called the Tax Act, where they brought back $500 million? $500 million versus $2.5 trillion, right? One-fifth. The stock market went up from 2004, never saw a retracement. Never saw a correction is what I should say. A correction is a 10% move from a high to a low. Never saw one. Not until July of 2007. And then the market went on and made its high in October 2007. Yeah, that was 3 years worth of juice out there. Don't think that it can't happen. In fact, those of you that are in your cave, that's cool. markets are going to, you're intraday traders. That's a whole different picture out there. Okay, whole different picture. Trading both sides of these markets, that is a beautiful thing out there. But the majority, and that's what I'm speaking to, is the majority of you out there. I want you to be thinking long and strong. I can't pound the table hard enough out here. I don't want you to get caught up into all of the, I want to prepare you for what it's going to look. I am the guy that taught you, because it's on your members page if you're a TFNN member, I'm the one that's taught you how to spot a bear market. Promise you, I'll be there if something changes. But is that bear anywhere near us for you longer-term investors and traders out there? Not even close.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're out of the gate. We've got the Dow trading down 28 points at 20,913. S&P off 5. NDX 100 down 20 points. Russell 2000 off about 3. Semiconductors, what a big day they had yesterday. Down 2 points out here. You've got gold up 260 and silver up 2 pennies out here. So let's go take a look at gold and silver, which means we really need to go take a look at the Japanese yen. So we'll start off taking a look at this picture of it. This is the daily picture of this chart. What we know out here, and this is the dangerous thing, very dangerous thing for metals because of the directional correlation that exists between this currency pair and them. And that is this, that the Japanese yen formed a beautiful Gartley buy pattern back on April 17th. What is a Gartley buy pattern? Well, a Gartley buy pattern is where you want to try to get in on a move that is just simply taken off. Well, if we take a look at the Japanese yen, and you can see the most recent bottom back in August of 2016, almost a straight line move. Wasn't a straight line move, but just a huge move from the low down there at about 99 all the way up to the 118 area. That's a large move inside of that currency pair. Now, for those of you, that's weakening, by the way, against the U.S. dollar. So the dollar getting stronger, the yen getting weaker out there. If we take a look at this move here, it formed an A to B equals CD pattern. One of the patterns that I'll teach how to master that D point at my upcoming workshop next Wednesday, which all of you can attend for free because it could not be easier to get a free subscription to my newsletter service, Mastering Probability. All those details are on the homepage at TFNN.com. You might even say, well, what the heck is an A to B equals CD pattern? Well, it allows us to project where price is going to go, identifies several levels of price projection out here, and there's your A to B equals CD, or 1-to-1. A to B equals CD. So it fits it. We get a nice bullish reversal signal. And now what price has done is doing, it's achieving level 2. There's really 5 outcomes of any Gartley buy out here. Only this one has got a nice little V bottom. Right? So we've got to be concerned, or you should be paying attention to the V for victory out here. And it was a fairly nice wide-ranging bar that was coming into that 0.618 level. Now, price has kind of stabilized, moved sideways really for the last day and a half so far. That is normal operation. That is like getting on an elevator, going up to the floor, 0.618, when we take a look at floors inside the stock market out here, and people get on and people get off. Here's what we know. If price decides to move above the 114.64 area, what's going to come at you is 116.41, and then maybe 118.65. And if that unfolds like that, what that's going to do, that's going to put a world of hurt, directionally speaking, on gold and silver, as well as bonds. When I say a world of hurt, I mean at least caps any kind of upside. Any upside is nothing more than a counter-trend rally to be sold as long as this currency pair continues to head north. Here is the daily chart that we're taking a look at. If we go look at, let me do this here, a intraday. Let's look at 4 different time periods for this same currency pair out here. Because what we want to understand is, okay, what's going on short-term wise? So let's say a 60-minute chart out here. And this is where it really is a bummer. It really is a problem for bulls of metals or bulls of mining equities. I won't call them mining. The equities are a different thing. How about just bulls of the T-bond futures out here? So look at the left-hand panel. In fact, let me just go ahead and explode this out here so you can get a feel for what's going on. This is the 60-minute chart here. Yeah, it almost doesn't really help when I explode it like that, does it? I'll just go ahead and explode it up a little bit this way. So as price found a ceiling, right? Here's a 60-minute profile, just so that you can understand how wonderful these profiles are. The work that John Logan and his group did, it is amazing. You talk about being able to add tools to your toolbox to assist you with trading and investing. I would be lost in the wilderness, as would you, without this. Just like the other tools, the other 5 tools that I'm going to teach you about on at next Wednesday's workshop. Now, if you look at this profile out here at about 5 o'clock last 5 o'clock last evening, as it was moving higher, it was running right into resistance, the red line out there. Now, we know that that is like super resistance. You might say, well, how the heck do you know that? Well, super resistance from the standpoint that that center of the box, not really in the center, sometimes it is, that's that little blue cyan-ish colored line, was closer to the top. That told us that was significant resistance. Now, that's a beautiful thing, because the message is if price clears that area, that being 114.37, that says you've got strong initiation momentum move to the upside. Nothing more bullish than a failed bearish pattern. What was supposed to happen was that, in fact, sellers would be in control of this price area, meaning all the way down to 113.79. And that's, in fact, what occurred out here. So as gold and silver were moving higher this morning, let's say like around 7 o'clock, and you were taking a look at it and you're saying, man, this is a bust out. These are going to be busting out, right? These metals are ready to bust out. Nothing could have been further from the truth. It was nothing more than a counter-trend rally. If we just take a look at the 1-hour chart for the Japanese yen currency pair, because it was coming right down into support. 113.79. Now, in order for gold, now, if we see the yen trade down below this. I've got a 15-minute delay on that. My apology. If we do see gold trade below 113.79, then you'll see gold and silver get some additional legs out here. We'll go from the 60-minute chart in essence to the next time frame, which is the 240. Okay, and that would say, well, then you would be looking for a move down to 112. And then you would see an extended rally both in bonds and in metals out there. But not until we see the 113.79 level is that even feasible or possible. What this also shows us at 114, that 114.37 level is really key. Because if you see price close above that, that's going to tell you and I that there's going to be another explosive move to the upside. And that means a explosive move to the downside in the metals and inside the bonds. So just take a look at this one currency pair. That's really all we need to do to understand what's going on inside directionally inside this market. This is an area that you absolutely want to be able to focus in on. So that takes care of those three instruments. What are we looking at inside of the, let's go to short term, because I gave you the longer term picture with regard to what the market is doing, the reasons why, and at least something for you to think about. Now let's come back and let's go ahead and entertain the shorter term traders out there. What is it that they should be watching today? And let's take a look at the strong industry, the NQ out here. Now let's start by taking a look at understanding, at least on a daily basis, where is the go, no-go line in it. And that happens to be one of the tools that I'll be teaching you how to utilize next Wednesday. And that's called Stevie's Red Line. It's really not called Stevie's Red Line, but I like to call it Stevie's Red Line. But it's really called the Oscillator Unchanged Line. Now that alone, you might say, what the Sam heck kind of language is that? Well, what that's really referring to is the bottom panel, which is a price oscillator. And price oscillator being nothing more than the difference between two exponential moving averages, those being 19 and 39 out there. Now, here's the beauty. When that price oscillator is above zero, and by the way, inside of the NQ, just so you can kind of get a feel here from a daily basis, it got above zero back on the trading day of December the 6th. Now, you look at my chart because that's where the crosshair is. When you have a price oscillator above zero, does that help you to say which side of the trade you ought to be on, or when retracements are happening, where you ought to be? Yeah, just go back. That was at a price level inside the NQ around 47.86. We're basically 1,000 points higher as we speak right now. Now, is that an important line to take a look at? It is. The oscillator unchanged line lets us know whether that price oscillator is falling or rising, because there's nothing more bullish than a rising price oscillator. Well, just take a look at where subscribers and I got into the market, which was really right back here. And as soon as price got above that price oscillator, that was a beautiful thing. All that's being done today is a test of Stevie's Red Line. A close below it says more retracement. Testing and rejecting says all.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow off 39, S&P down 7. So let's go back to the NQ out here and really just say that the most important thing for me, what I'll be watching today, is really going to be the close. Is there going to be a close below Stevie's red line? You might ask what that's priced at right now, so I'll go ahead and give that to you as soon as I can get there. That is priced at, where is it here? Come on. 56, is that right? 56.61.15 as we speak right now. Just put 56.61. That's probably a good enough number. If there's a close below that, this will go ahead and signal that, hey, you know what, P, maybe the date of the 17th through the 19th or what have you, maybe that's off by a week, because this would be giving us the first signal that, okay, short-term top could be in place out here. That you got to see. Now, the thing that the thing that I would add caution to, though, is that today is expected to be a move to the downside. Remember, if we go back, take a look at the seasonal chart out here. Right here, you're going to see, if you look down to the bottom of my screen, see it says May 11th. So historically, what the Dow should be doing today is actually pulling back, and that's it. And then that means that at the end of the day, and you know how I hate to say that, should be a move to the upside into next week out there. I don't know if it's going to play out this way. I think that it will. I think that it will play out like this. So a down move today, folks, actually signals a potential, I'll put potential, buying opportunity. Hey, let's go out to California and speak with Garo. Garo, thanks for calling. Thanks for holding. How are you doing this morning? You're up nice and early.
Yeah, how are you, sir? I'm good. How about you?
I am doing very well. Nice to hear your voice. And so today you are trading Chipotle, I believe. Is that correct?
No, sir. I'm short on Snap from yesterday. I'm looking at Chipotle. What's your idea on a daily chart? Do you think that this will pass its high of what was that, $497 up, or is down towards the 50-day, towards 445?
Well, first, Garo, and I appreciate the question, but nobody actually, everybody here wants to stand up and give you applause there. You said you were short Snap from yesterday.
Yes, sir. I'm joined with Earnings Whisper, and
yes.
That was in the report. That was 19 cents. They're gonna fail on 19 cents per share. That was about a week ago that I read that report from there.
Got it. Well, kudos and congratulations to you on that trade after closing at $22 and change last night, and right now trading at $18.39. So now we'll go take a look at Chipotle. But you told me you were short. It was nearly impossible for me to go take a look at Chipotle right there. But let's go take a look at it. So repeat your question if you would for me. So you had me mesmerized at I'm short Snap.
There is a site called Earnings Whisper.
Yeah.
And there are two other sites that they come with the earnings and their evaluation.
Yes.
Yeah, 99% of them is correct. Sometimes it's wrong,
Sure.
but that was there about a week or 10 days ago. That snap is not going to do it.
That's
So
great.
yesterday I shorted at $23, and today I'm going to get out of it. And that's it. That's my trade done. I'm waiting to go
Nice.
as low as it can. We don't know
Yeah.
how far it's going to go down, but eventually I'm going to buy Snap. Snap is going to be something like Facebook in the future by end of the year. I have no doubt about it, because the new generation, they love that. Not my
Yes.
generation, but the new generation, they
I
love
understand.
it. So,
I
yeah,
understand.
this is something
No.
that, yes, it's, yeah. But
So let's go back to Chipotle now. So on Chipotle, what's the position that you're taking there? First, identify for me what is it? What's the information that I can help you with?
Chipotle has dots on the top,
Right.
which is something about 492.52. That has to break there, so I will go long. If it doesn't break there, I'm not going to go long, and I'm not going to short it here. Because it is not shortable, it is not longable. So I need your opinion.
That's an excellent call, and that's exactly what my charts are supporting for you as well. And for those folks that are just listening that aren't familiar with Garo, extraordinary trader. He utilizes the parabolic SAR system and a number of different moving averages, simple moving averages, folks. He uses the 5, the 21, the 50, and the 200. He uses them very effectively, uses them on daily charts and intraday charts as well out there. And in this case here, parabolic SAR being one of the J. Wells Wilder tools out here, you'll see some blue dots on my screen. Now, my calculations, for whatever reason, are slightly different than Garo's, but they're close enough. And 492.78 on my screen is what you folks are looking at. And that happens to be, if that level, so that indicates it's a signal as to whether to be long or short utilizing the parabolic SAR. Not necessarily to take that trade, because there needs to be a system such as the one that Garo has created that works successfully. But it does assist us in being on the right side or the wrong side of the trade if you utilize that system. Now, one of the things that Garo said was, hey, I won't go along this equity till I see price close above that, which would then switch the signal. That's 492.78 on my system. I think it was 58 or 52 on Garo's system. But he also said, hey, it's not shortable. And I agree with that too. And the reason why at a minimum it's not shortable is because yesterday and today still it's trading above its TAS market profile high, which is priced at 479.25 out here. In fact, any move lower, I think what you would suggest is that it might find support at your 21-day simple moving average around the 475 level. Yes? No?
Yes, sir.
Yep.
Yes,
so
sir. If it goes to 474 and change, I will short it there. I would definitely. It's going to go down towards the 50-day. If it's not, if the 5-day is on top of the 21-day, that is not shortable at all. That the price may go down, but that may be a buying opportunity going long. But still, it is not long because it hasn't passed that barrier of that dot. So it is in no man's land. Now, it's a gamble to buy or short it. It's a gamble here. But I wanted to see that your advanced charts, what do they say?
Yeah, no, they say the exact same thing. They say that you really couldn't short this equity until it were to close below 483.50. And then at 483.50, it says the price discovery would take you to 476.89. Not a great reward to risk trade. Once it would be below the 476.89, then it opens up 460.38 as a possibility. That's what the charts are saying to both you and I right now. So we have two different, in essence, systems or tools that we're using, but they're really communicating the same thing to you and I. I just want to put this on a weekly basis, just understand volume, and because I know you don't really utilize volume as one of your tools and techniques, but as this was pushing higher the week that began April 24th, so 2 weeks ago, it was pushing higher with volume out here. So it really does suggest to us that that high wants to get tested again. And that's at 497.48 level. That's the high from that week of April 24th. So that's what I'm seeing, my friend. All righty.
Very good. Very good. Very good.
Thanks so much for calling.
Thank you for your time. Thank you. Bye-bye.
Garo in California. Right now, we've got the Dow trading off 16 78 cents. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I think we just have a brief time here, so let's take a look at what to be watching for today. You've got the long-term view on the markets. I want you to think buy the next dip. Now, as we take a look at what's going on inside the NQ right now, the strong indice out here, the strong equity futures contract, the price level to watch, we're now focused on the 4-hour chart. That's really panel 3 from left to right on my screen, and panel 4, the daily chart. This suggests to us that the price area 56.42 to 56.46 is going to be tested. Now, tested, the question is tested and or rejected, but look for that. And we're in this area basically now, but look for that to be a strong level of support. What happens if that level of support fails? Well, then you go down to your next number, which is 56.07. Watch that. But if that holds, folks, that is where you start to begin to see a bounce take place out here. Let's go take a look at the week link out here. And the week link, I'm going to call it the Dow Equity Futures Contract. Let's do the exact same things out here. The Dow Equity Futures Contract, the level of support that it's going to deal with, and it's almost there right now, is 20,800. You and I have been looking at that figure for days out here as an area of support. In order for the markets to really crack out here, we're trading right now at 20,798. It's going to be this, and this is a daily chart that we're looking at. So we're looking at panel number 2 from the right-hand side side of the screen, 20,800. That is where price is trading at as we speak right now. So if the bulls have strength, this is a price area that is going to hold. So be careful. If you're intraday trading and you're short, you want to definitely bring your stops down because of the price level that we're at right now inside of both the NQ where it's headed and inside the Dow equity futures contract. If we go take a look at the ES mini, this way we cover all of the, of course, I'm not talking about the Russell just yet, but if we take a look at the ES mini and try to identify its level of support, well, in essence, you're really trading at it as we speak right now, this 2283 level. On the daily chart, that happens to be that POC. That happens to be that point of control area. And this is that area where both buyers and sellers are most comfortable with. So, folks, that's the weekly, the long term, the intraday view out there. Stay tuned. You got Tommy and Tom O'Brien coming up, and then after that, Basil, and then the options hour. Then I'll be back with you from 1 to 2 every.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.